Welcome back to Strong Man Personal Finance, everybody. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term bottlehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. Go buy it. It's a lot cheaper than Jeremy Financial Education's course, and it teaches you more. And apparently, there's a stock market crash going on, and everybody is just losing all of their wealth. It's time to sell all your stocks, ladies and gentlemen. It's time to sell all your bonds and pile all of your money into shiny rocks and cryptocurrency. That's right, at least according to Robert Kiyosaki. So you go on the YouTube space, go ahead and subscribe to all the big YouTubers. You know, me, Kevin, Jeremy Financial Education, Graham Stephan, this, that, and the other, Andre Deek. And all these guys have all these crazy thumbnails about a stock market crash. Now, you'd imagine that somebody like me, I'd be losing tons of money during a stock market crash. But I decided to go check my Vanguard account. And funny enough, my balance has increased. The amount of money I have invested in my Vanguard account has gone up. That's so weird. I thought stocks were going down. So let's go check out these two clowns that I put on my thumbnail, Robert Kiyosaki and Jeremy Grantham. And I'm going to show you they're a bunch of fear-mongering losers and why, if you're a long-term investor, it doesn't freaking matter. And I'm also going to show you that as long as you save diligently, you could still build wealth, even in the middle of a stock market crash when the numbers go down. Okay? So first of all, I want to show you my favorite ETF, ARK. Now, I guess if you bought ARK, you'd be down 59%. So I guess you consider that a crash. ARK's a joke. Let's go look at Robert Kiyosaki. So who is Robert Kiyosaki? He's the author of Rich Dad, Poor Dad. He's a real estate investor, and he's got I guess he invests in small cap stocks. Just buy small caps. Now, recently, this guy's been going on a grifting tirade. And instead of telling people to dollar cost average into total world index funds and tax advantage accounts, stay the course, don't time the market, minimize your expenses, and maximize your income. No. This guy tells you to buy shiny rocks, gold and silver, and Bitcoin to protect yourself from the crash. Oh my God. Oh my God. Look at these titles right here. Look at this freaking doofus. The biggest stock market crash is on us now. Worse than the Great Depression, apparently. Yeah, because we're about to enter a Great Depression. The crash will be worse than 2008. Be careful. This is serious. How to make millions in the upcoming market crash. Just buy gold, bro. Who controls the stock market? Blah, 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 blah. Inflation will wipe out 50% of the population. It's the end of America. Oh, God. I need to start doing this kind of grifting, man. Like, here I am going to work. I'll go back to work tomorrow. You know, I do taxes. I get paid less than 100K. Like, why am I doing that? Why am I working, bro? When I could just go on here with shock faces and say the stock market or inflation is going to wipe out 50% of the United States population. Why don't I just do that? So here's the grift, okay? He basically tells you, you know, the world's ending, the collapse has begun. Oh, there's Jeremy Grantham. It's the end of the world, and that you should buy some stupid product. But my investment account keeps going up. It's weird. Next, we have Jeremy Grantham. So I guess he's like I don't really know much about this clown. I've been seeing people talk about him, but he's this old guy. Nothing wrong with being old, of course. I mean, I'm 32. And he's basically just saying we're in a massive bubble, which I agree with, but he's a massive fearmonger. He's a massive freaking fearmonger. He just repeats stock market crash ad nauseum until he's right. And whenever the market does crash, he's going to look like a genius. I don't know how long that's going to take. He may be right. We'll see. But just in general, you go on YouTube and everybody's telling you the next crash will be a disaster. And usually the theme is buy gold and silver. Now, I am not a gold and silver investor. I think gold and silver are shiny rocks. I think they're old news. They used to be a currency back in the day when we had freaking galleons and, you know, the Spanish Armada. Yeah, gold and silver, bro. Yeah. But even gold and silver can be inflationary. You ever read about Spain when they discovered the New World and they took all the gold and silver from the Americas, brought it back to Spain, and they had massive inflation? What? So I just think it's garbage. Like, it's a shiny rock, dude. I mean, like, I think digital currency, well, not crypto, but The fiat currency we have in general is actually better because you can actually control inflation. You can't really do that when you have a fixed number of shiny rocks and then a bunch of shiny rocks appear out of nowhere. It's just, I don't know, I think it's stupid, pegging your dollar or your currency to a shiny rock. But at the end of the day, that's all these guys are doing is they're telling you like, oh, the world's ending. Now let's go look at my Vanguard account. So this is not all my investments. Okay. This is some of my investments, but I want to highlight something to you. I started investing in Vanguard in 2014. And I actually started earlier. It's a long story, but I had a bunch of money in there. Then I sold out of it. Then I put it back in. This was like in 2013, 2014. And I started reinvesting in 2014, and I have not sold since. So from 2014 to 2022, I've been investing in basically one fund, recently two. Back then, I had the Vanguard Target Retirement 2060 fund. Still have it. And recently, I've been adding it to VT Wax, like earwax. It's the Vanguard Total World Index Mutual Fund. It's the same thing as the VT ETF with some slight differences. The reason I do that is I can dollar cost average. I don't have to worry about like logging in and buying shares of VT. I just set an automatic contribution. And every month, I get, how much? I have $1,000 being invested. So if we look at my balance over time, okay, let's check this out. Number one, I've had a 9.8% compounded annual rate of return. Not freaking bad. But that doesn't beat inflation, bro. Because inflation's 9% in 1 year, bro. Yeah, okay. Look at this. So here I had this zero balance. And then I had apparently a massive contribution of $11,120. It's kind of random. And you can see my balance steadily increasing. And the vast majority of my balance was from investments. That's the total. The total balance is there. The blue is the investments. The green is the returns. And then recently, we saw that in 2018, my account dropped precipitously. Now, you may ask why. Well, I got divorced. I had just broken $100,000 in this account. And then divorce, split it 50-50. Freaking destruction. So then I was down to $50,000. And ever since then, I've just been consistently investing. And would you tickle me pink? My balance has gone up. My current balance is $87,174 in my Vanguard account. How could that be? Look at the balance going up. Look at the blue. Blue going up. Now you see the green goes down a little bit because the stock market itself is declining, but the overall cumulative balance is increasing. Why is that? Well, I continue to dollar cost average. I continue to buy more and more and more shares. That's how long-term investing works. The more you buy, the bigger your account goes. I know that's freaking crazy. You're going to buy during up markets. You're going to buy during down markets. Right now, we're in a down market. Guess what? I'm buying and buying and buying. And my contribution rate is so high relative to the account balance that I'm gaining in wealth. I mean, how much did I have in 2021? At the beginning of 2021, I had roughly $64,000 in there. Now I have $87,000. And wait till I cash out my pension. Woo! Every month or every 2 weeks, $500, $500. If I get a raise at work, $750. If I start making more money from YouTube, $1,000. I'm going to be rich as heck. And I don't have to have crazy freaking returns. I don't have to time the market. I don't have to analyze individual stocks. I don't have to worry about down markets because my contribution rate is so high, my wealth still increases. And the other benefit is, let's say the stock market crashes and it's down for 10 years. I'm chucking $1,000 every 2 weeks. Ka-ching, ka-ching, ka-ching. What happens when the market eventually goes back up at some point, 10 years down the road? Woo! Hundreds and hundreds of thousands of dollars, millions perhaps. So by ignoring these freaking doofuses, Jeremy Grantham, I just continue to buy, and buy, and I'm going to be wealthy. And this is not my only account. It's not my only account. I mean, this is not hard, ladies and gentlemen. If you just buy index funds and you contribute as much as you possibly can, you would be shocked how freaking rich you would be. And of course, don't get divorced. I mean, look at this. Oh, what was my balance? I was at 100,960. I was like, yes, I got six figures. Bloop, down 50%. But that's neither here nor there. So be careful of that too. But yeah, these guys are clowns. Hey, all right, I saw your message. I'll do it. You're so pro Vanguard target retirement funds. Hadn't heard you talk about them before. I mean, basically a Vanguard target retirement fund is VT wax with some bonds. So if you want a one-stop shop and you want everything managed for you, you just put it all in a target retirement fund and you let it allocate over time to be more conservative. And it's easy. That's what I did back in the day. Now I'm just buying VT wax. I mean, I probably could have skipped the target retirement fund because the freaking fees were higher. They just dropped the fees, so it's better. But there's nothing wrong with the target retirement fund. The only issue is you want to have them in a tax advantage account, because if they have some kind of massive distribution, you're screwed. Target retirement funds also have bonds. Bonds pay interest. That's tax inefficient. Interest payments are taxed at higher rates, usually, than dividends. So you definitely don't want bonds in a taxable account. So that's the only downside of having the target retirement fund. But in general, if you just want a place to park your money, you want VT basically with some bonds, get a Vanguard target retirement fund and it allocates itself for you. And you're probably going to outperform most of the clowns. You outperform basically all the clowns trading on YouTube. The almighty grifting Sven says the average investor could pick stocks and buy his 500 a year grift course. He's a clown. I don't like Sven. My Vanguard went from 14 grand to 7 grand between 08 and 09. Never put another cent in. And it got to 54 grand last year. There you go, ladies and gentlemen. Now imagine imagine during that dip, right? It went from 14 to 7. And you were buying and buying and buying and buying and buying and buying and buying. Holy freaking crap, man. You get so rich so quick. It's that easy. Woo! Man, I can't wait till I can retire and just make YouTube videos, not have to go to work. Oh, boy. And Vanguard's going to get me there. Alibaba! I'm still not selling for a long time. Good to hear that, what I've been doing in my 401k. Yeah, I have nothing against target retirement funds. Nothing. I mean, if you want to be 100% stock, you may not want to do a target retirement fund. But if you want some bonds, which there's nothing wrong with that, especially as you get older, do a target retirement fund. I have nothing against them, especially with the Vanguard, with their they slash fees. Their expense ratios are like cheaper than VT Wax. Like, it's freaking great. Bought 15K into American Eagle and 1K into TPX. What is that? Talk about diversification. Young man, you need to start buying some VT. You're starting to piss me off, boy. I'll look at American Eagle, okay? My Goatly is up 15%. I should have bought Oatly, guys. A highly unprofitable, massively share diluting trash soy boy liberal company that, basically says they hate profits in their financial statements and on their website. Yeah, that's just as good as VT or Alibaba. I went into picking my own stocks after the OABS. I've been doing okay. I mean, you can do it, but I like index funds, obviously. We like when you get analytical and give good info like this. Thank you very much. Appreciate it. I thought people liked me because I was shirtless. Is it good to do a rebalance IRA? 70% VT, 30% bonds. Depends how old you are. I mean, I'll eventually be 60 to 70% VT at some point in my life. And I'll be 30 to 40% short-term bonds, something like that. I'll have to figure it out. But 100%, like, there's nothing wrong with bonds, short-term bonds, because they don't fluctuate as much due to changes in interest rates. Nothing against it, because at some point, you're going to have to withdraw from your retirement savings. Everybody's like, oh, just be 100% stocks forever. Well, what if there's a stock market crash the day after you retire? You're going to have to sell your stocks at a loss. But if you have bonds, you have that stable part of your portfolio you can use to buy dips, you can use to reallocate and rebalance, or you can use that to withdraw and live off of. So what about younger people? I mean, honestly, there's so many different things out there. What I would just do is, if you have no idea, you don't know, just pick a target retirement fund. I like Vanguard. Find the year you're going to retire and put money in there. That's it. And then you let them reallocate it for you. They have a fixed formula for how they transition from bonds to stocks. That's all you need. I mean, I don't see what else you need to do. The less stress you have in your life, the better. Because everybody will tell you a different number. Oh, you only need 10% bonds. Oh, you only need 20% bonds. Oh, you need this, that. Or you only need this much international. You only need this much. Just freaking pick something. Just pick a target retirement fund if you're so confused. And don't stress it. Don't think about it. Just let it go. I've done just fine with my target retirement fund. Echoes is paid off by Meat Breath. He said he likes Kevin better than Jeremy. That doesn't mean he's paid off. And look, Kevin is smarter than Jeremy. That's just the truth. I'm not saying Kevin's an angel. He's smarter than Jeremy by far, by leaps and bounds. And his course is superior too, and it's cheaper. Why buy VT over QQQ? Why would you buy QQQ over VT? I could ask you the same question. QQQ is a bunch of massive tech giants, heavily concentrated, that have massively outperformed in the last decade. VT is every stock in the world. You think all these tech giants are just going to keep returning 15% every freaking year, 20% every year over and over again? No, I don't think they are. I think if you buy into QQ now, you're buying into a bubble. What about I bonds? That's a long story, but I'm not a huge fan of I bonds. Intel is down. Are you interested? Intel is a tough one. I'm concerned about their revenue growth. If they can continue to generate, positive revenue growth in the long run, I would say it's probably a decent deal right now. But I don't know. I can't tell you where their revenue is going to go. I mean, it's definitely a value stock. And when I've done the analysis before, I thought 42 might be a rough approximation to revisit. So maybe I'll look at it again. But I'm concerned about the revenue growth because they had declining revenue from last year to this year. They're projecting a decline in revenue. If that decline continues, it may not be such a good value. I mean, that's kind of priced into the stock. Vanguard is cheap as far as IRAs, and they have some pretty decent funds. Yeah, they have VT. Of course, they have decent funds. For younger demographics, I think investing in safe options like VT is necessary, but I also believe in doing due diligence. Well, VT isn't safe. I mean, how do you define safe? VT is 100% stock. VT can go down 50%, 60%. Entirely possible. VT can get freaking wrecked. That doesn't mean it's safe. People have changed their perspective of what's safe and what's not. People used to think, bonds were safe and stocks were risky. And now people say, or index funds are risky. And now people say 100% stock index funds are safe, which they're not. And individual stocks, meme stocks are risky. When you buy a meme stock or like an individual stock, you're taking your risk well beyond what you could possibly imagine. So I think younger people should be in VT because younger people lose freaking money like crazy on these stupid stocks. Now, you could buy VT that's safe and outperform the clowns on YouTube. Name one Chinese stock that pays a dividend. JD just paid me a dividend. What do you think about Lucid? Trash. Ew, Lucid is trading at like 250 price to sales. Lucid. Don't they have like a $31 billion market cap? It's like, it's smaller than Ford's market cap, but they make like $100,000 electric luxury cars. This whole thing is a freaking bubble. VT, less risk. Yeah, that's true. QQQ is so highly concentrated. It's a disaster. Like, no, I would not buy QQQ. Intel is a stock that isn't going anywhere, but so was GE. I'm not going to say Intel doesn't have potential. If they can grow revenues even slowly, I think they can knock it out of the park. I think it's in a good value territory right now. And I think a lot of the other chip makers are massively overvalued. But I'm a little concerned about Intel. I mean, maybe I'll do some more research and maybe I'll buy a little bit because it's in the range that I was considering looking at it again. It's safe relative to Jeremy's picks. That's true. Started dollar cost average on VT. Bless me. You are blessed by the boglehead priest, Mr. Bell. Anointed. 10 cent pays a divvy. Chinese stocks pay dividends, bro. I mean, y'all think China's a scam? I mean, maybe some stocks are, but not all of them. But Lufufu is going to be a billionaire, bro. No, so Lufufu is actually going to be he's going to have $87 trillion by the time he's 62. Because assuming he has $10 million invested and he can invest roughly $500,000 a year, which I think is reasonable with all his grift money. If he gets a 70% return like he claims, he is going to be a 87 trillionaire. He'll have $87 trillion in 30 years. Yeah, bro. Yeah, of course. Jeremy Lufufu. Buy his course, bro. Thoughts on Huya? Never heard of it. If you had $50K right now to invest, what would you put it into? I would immediately throw it into VT. Not even freaking joking. Maybe I'd take like $5,000 out of that, $2,500 out of that and buy some fun stocks, maybe like Intel or something. I don't know. But I would literally put all 50K in VT and I wouldn't care. Without a thought or hesitation. Straight in, baby. Would I pay off my car? Nope. Low interest rate. Would I pay off my house? Nope. Low interest rate. Would I buy every company in the world at market cap weights? Yeah. NEO is a Chinese stock, therefore all are scams. I agree. Seagate. I don't know what that is. What's your biggest beef with dividend investing? Just tax? Yes, 100% just tax. I mean, I don't know. Coming from an accounting perspective, I look at a dividend. I've done journal entries, at least in school, for dividends. And you're literally just reducing the equity of the company and you're taking cash from the company and giving it to a shareholder. Okay. The value of the company. If you're taking equity out of a company, that company loses value because you're taking equity out of it. You put money in, you put equity in, you take equity out. It reduces the value of the company in proportion to the dividend. It does nothing but create a taxable event. That's why these companies, these clown companies, pay like high dividends. Hey, high dividend, yeah. And then you look at their cash flow, and it's like, how are you affording this dividend? Like the one Chris Sane put in there. He put 50K into American Eagle. Yeah, totally. Thank you. Appreciate the info. I watched some of the daily crypto streams. S is just sad. I hate crypto so much. I really hope it all goes to zero and all these shills get thrown in jail. I think it's gross. Seagate is a hard drive company, solid state drives, hard disk drives, just storage for computers. Oh, okay. Your chapter on workout and investing inspired me to live for the first time since the pandemic. See, guys, see what a great book I have. What an amazing book. You should all go buy it, okay? It's what, $13, $13.99. I don't even know the price of my own book. But it's not a bad book. I'll give myself some props. I got because investing, personal finance is not just stocks. All these clowns on YouTube just talk about stocks. It's not just stocks. You got to manage your cash. You got to live below your means. You got to buy life insurance. You got to protect your family. You got to take care of yourself. You have to be physically fit. You have to make smart decisions when you buy large assets like cars and houses. There's so much that goes into personal finance. Just buy stocks, bro. Like you look at Jeremy. He's a personal finance disaster. He makes a lot of money, but you look at how he spends it, the guy's a freaking wreck. Isn't Tattooed Chef having its tattoos lasered off? I hope so. When will you make an accounting series on your channel? I don't know. See, what I'm worried about is like YouTube, I guess how the algorithm works is like they lump your channel into a certain category. I don't know if I did accounting, if that would kind of like corrupt the finance section of my channel. So maybe I'll make a new channel to covering accounting, or maybe I'll experiment and do a couple accounting videos and we'll see what happens. But I don't want to like screw up the algorithm because I think I'm doing okay on the personal finance sphere. Companies like Apple, Microsoft just have more money than they know what to do with, so dividends make sense. I guess, yeah. If you have no other use, sure, pay it out. Cabaroon cabulous. But on a macro outlook, don't you think we are heading for a slow, stagnant GDP if we don't crash? I believe we're in a slow ride. Yeah. You look at GDP projections. Our GDP is, expected to grow at 2% on real terms going into the future. Like that's nothing. That's why I think stocks are going to suck going forward. But we'll see. I might buy your book for someone else as a gift. Buy 10 books, bro. 10. Accounting series costs $75 an hour, son. Yeah, actually, I charge $70 an hour for specific accounting tutoring. And I think that's actually a good deal because I've been doing it for a long time. When I first started, I charged $50 an hour and I kind of sucked. And then as I got better and better, I've tutored over 500 something hours. I'm pretty good at tutoring accounting now. So if you want some personal accounting tutoring, go to wiseant.com. See, I'm Griffin, just like me, Kevin. I'm a CPA offering accounting services. But you can go to wiseant.com and you can get not free tutoring. You can get tutoring from me. What do you think about that? People in Jeremy's comments, they are following him for at least 5 years. Are they that moron to follow his investing style? I believe they all invested in Tesla. Well, yeah, the whole thing is a Tesla grift. At the end of the day, the reason these guys are famous is Tesla. And Tesla is still kind of held out. And you've still had massive returns if you bought Tesla when they were telling you to. So they still have some legitimacy because they're looking at Jeremy and they're saying, well, Jeremy's telling us to buy all these stocks and they're getting crushed. But remember what happened to Tesla? You just had to stay the course and keep buying, and then you would make a fortune. So as long as Tesla holds up, these clowns are going to keep following him. Or you could just buy VT like I've been doing, and I have hundreds of thousands of dollars even after a divorce. Not hard. How about a video in case such a situation in regards to personal finance? Are you talking about if the economy's flat, you just have to save more. That's it. You just have to save more. Make more money, save more money. That's my whole strategy. Tattooed chef is a woman, so it's not tattooed trucker's nutsack. It's tattooed chef's wart encrusted labia. I find Microsoft interesting. The bigger they have grown, the more they have grown revs and earnings per share. It's now past 10%, contrary to big. Well, here's my concern about these big companies. Like at some point, they're all going to peak out. And when Microsoft peaks out, what do you think is going to happen on the freaking stock price? Because everybody's like looking at the growth and you're like, oh, it's going to grow at this percentage per year. And then the company hits a peak and then revenue projections crash massively, like what happened with Facebook. And then Microsoft gets wrecked just like every other freaking stock. So I don't know. Large stocks like that everybody's looking at, I'm not a fan. When will you have a Discord? This community needs to be together. Well, Capital Mindset, who actually just commented, also has a Discord. So if you want to go check out his, you can go check it out. But I just don't have time for a Discord. I mean, I have to go back to work tomorrow. I'm crying inside about that. But I just don't have time. I mean, I got so much crap going on. I tutor, I have kids, I have YouTube videos, I have a job. I don't have time to run a Discord. I might use you for FAR, by the way. Oh, is this the other guy on Capital Mindset? Hit me up, bro. I'll get you a discount. Okay, I'll give you 1% off. You should buy Jeremy's course. Maybe you'll be rich like him. Yeah, 100%. I guarantee you, if I succeed on YouTube, if I get as big as his channel, I will be massively richer than him. No doubt in my mind. Can you imagine if Strongman Personal Finance was getting $500,000 per year and investing that into VT? I would be so freaking rich. I mean, that's my whole plan. I know I'm a grifter. Why didn't Jeremy put an extension on his garage with all his money? I don't know. He's probably burning money hand over fist. My Microsoft went 5x from when I bought it. I was so surprised I took profits and bought a house. Yeah, I mean, you got a good deal, and you were smart to sell out of it. Got to get back to work. Looking forward to more live vids. Be well, everyone. Yeah, get back to work, boy. Not everybody can be a paternity leave like me. Should have hopped on the Baba train. I was a non-believer. I mean, I don't know what's going to happen with Baba in the short term. Look how jacked up my hair is. Ugh, I'm such a turd. But in the long run, I mean, I think Baba's going to freaking crush it. So I'm not buying any more right now, but I'm just going to wait and be patient. And if this stock goes up, even more, cool. Are you taking the CPA exam? Text me. We'll talk about this, okay? I'll give you a discount. Like I said, 1% off. I thought you quit YouTube for a job. That was a joke. I'm not throwing away my paycheck right now for YouTube. YouTube doesn't pay that well, unless you guys sign up for my Patreon, bro. But you got to put a lot of work into YouTube to make a lot of money. What's your cost basis? $135. Paternity leave. What kind of liberal nonsense is this? Soon you'll be taking period leave. So my work actually didn't offer any paternity leave, but I talked to them and I was like, hey, I'm having a kid. Can I have 2 weeks off? And they were like, yeah, we'll give you 2 weeks off paid. But if you quit, you got to pay it back. So I was like, all right, deal. Anyway, that's it for now. Maybe I'll do another video and I'll talk to you later. Cheers.